Welcome to another VC Wisdom Pod. We have Matt McDonnell with us today. He's an investor, developer, and entrepreneur in Austin, Texas. I'm just glad to have you on, Matt, and eager to jump in, talk about Stealth VC and everything you've been up to. So, a bit more about yourself. Tell us what you've been up to.
Yeah, thanks for having me. So, at Stellify, we invest in what we call a commercial value chain. So anything from identifying a property through the construction, operations, and disposition of that asset in a commercial asset class. So generally not residential. We've been investing out of one fund vehicle and have been working together for quite some time doing angel deals, and so excited to have this business doing well and looking forward to fun too.
And how did you get into this? Like, who are you as a human?
Yeah, so I everything by accident. I often joke that I've yet to have a job I knew existed when I graduated high school. And so I ended up starting a family office and doing a fair amount of real estate investment and venture investment. And had worked in a venture-backed software company prior to that. And so what really sort of evolved was seeing first starting a real estate development business, generally ground up multifamily and for sale townhome product, and realizing how little tech adoption and penetration there was in the market when I sort of naturally would go and look for things. And then having been doing a fair amount of early stage direct venture investment, really pivoted my own personal angel investing towards real estate tech. And I did that with my two partners in Stellify, Paulo Buero and Nick Yarnall, who had similar parallel experiences in building a value add multifamily firm. So they're generally, doing value add acquisitions, and they ran into, sort of a lot of the same kinds of challenges. So it was, pretty complementary match where we would pick each other's brain because I understood the development perspective. But, when you start thinking about what that software does when you're just operating a stabilized asset, they were able to provide that perspective as well.
Is real estate boring, and is boring profitable?
Well, I don't think anybody would think real estate's been boring over the last 4 years. It's been, there's been
COVID, right?
Yeah, well, so you have this wild run up in asset values sort of across that whole industry. And then you had a pretty significant decrease in value. But at the same time, you've got rising interest rates, you've got rising inflation. And so it's not just the cost of running the asset, right? It's also what can your tenant base actually afford to do. And so you have that, and then you have a lot of markets in the US, like in the Sun Belt, where we overbuilt supply because money was cheap, and the demographic tailwinds are still true, right, in the Sun Belt in the United States. But that party sort of ended up not going on forever because of a confluence of factors. And so I think while it's been low transaction volume for any owner and operator, it's been sort of a uniquely challenging time that I think if, most people are candid, it's been going on longer than any of us anticipated.
Is Austin one of the hottest market in the US and maybe in the world?
Well, so it was. I've been in Austin for about 16 years, and we sort of perennially would hit these metrics of 189 people moving here every single day, number one for job growth, right? So you had this period of just wild expansion, net in migration into Texas. But as a result, we've also been one of the hardest, if not the hardest hit major metros in this recent real estate slowdown. And so, it's been a little bit of a whipsaw, and we've lived through this before. After the great financial crisis, Austin recovered relatively quickly, right? And I think that the reason that you'll see that again here, maybe not as quick as any of us wanted, is that there still aren't enough homes. There's still people moving here, and so there's some challenges in this market, but I think there's certainly a recovery that consensus sort of puts in 27, 28, 29, and a return to something that resembles normal, although certainly not with 0% cost of capital on a go forward basis.
So Austin, I guess for life, right, like the musical scene, the restaurants, and generally the culture, but also for work, it's sort of becoming another Silicon Valley. Have you made the comparison between both?
Yeah, so it's Austin's had a tech scene for a very long time, and that was part of the reason that I moved to this city. I think the other thing that you've seen is, you've seen a little bit less employment growth, right? But you've seen some more startups. We just had a huge announcement about an enormous semiconductor facility that a consortium of Elon Musk's companies are collaborating on. And, we've had one of the strongest semiconductor industries in Austin for the past 40 years. And so there's talent here, right? There's people that really understand that industry and that marketing process. And so, I think we've sort of been resilient, right? But I think if you talk to a lot of residents, particularly from a professional perspective, this kind of marriage of this tech industry with, like you said, these sort of high quality of life, when you look around the country, it's hard to find other places that have that. And by the way, the upshot of losing 20 to 30% of real estate's value across the market is that it's now actually a lot cheaper compared to other markets. And so some of that sort of attractiveness from a cost of living perspective is actually returned to this market.
And isn't there greater concentration of real estate focused VCs in Austin? Like, you're not the first guy that I speak to. So if you can talk about that. And second, tell us how you're different.
Yeah. So, there's lots of real estate focused VCs. I think everybody has a little bit of a different definition, right? So that's why at the start of this, I said, here's how we think about the commercial value chain. There's lots of VCs that are generalists that also really like and are very good at investing in prop tech because they like the market dynamics. So I think that, you've seen over the last, call it 7 or so years, you kind of had this initial wave of prop tech excitement, a lot of investments. Some did well, some didn't, right? People learn, and that also coincided with a very hot venture market with inflated valuations. And so, some people had some bad years and some people had some good years. But I think what's happened is that the market has just sort of matured in this next part of the cycle. And I think it's become clearer with some of these proof points that there's good opportunity here. So you see a lot of people, I think, obviously following the growth in the market. And so the way we differentiate ourselves is, I think, a couple of things. So one, we're generally problem statement investors, right? So we say, hey, we've noticed this issue in our own operations. We've canvassed the market to look for software that will solve it. We haven't found anything that's compelling. Now it's sort of at the top of the list, right, in our sourcing activities. I think the second thing is that we're able to deploy product either as part of diligence or just becoming a customer of a whatever prop tech solution that fits the need, and that allows us to give really good feedback. Product is a real challenge in any startup organization, but there's some interesting, I think, and deeper usability questions in the real estate world. And then I think that the last piece is that really the hardest part about prop tech, from my perspective, is the go-to-market strategy is not a playbook that everybody knows and has executed 100 times like B2B sales. And so our peers as real estate professionals are the lower middle market real estate owners, operators, asset managers. And so we're able to sort of help shape that go-to-market strategy, provide real introductions to those other operators. And so, that also all matches, right, what we're capable of with the stage that we like to invest in, which is post product market fit and ready to go run some of those growth initiatives.
Are your startups, your portcos, accelerating or decelerating the housing crisis? And is there such a thing as the housing crisis?
Yeah, that's a great question. There's a housing crisis. I know another developer that has this great line that there's not an affordability crisis, there's a zoning problem. And I think that that's part of it. Now, also in Austin specifically, we did relax the land use code a couple of years ago, and it did incentivize more housing. And that's part of why the market's tough, right? And so I think that's really, like, when I think about the housing crisis, it's a real balancing act between having capitalistic market incentives for private businesses to build more real estate, right? More apartments, more townhomes, more single family homes, and to do the things that you can do as a municipality, like loosen the development code, or provide tax abatements for certain desired property types. That's a real balancing act, right? And it's hard to get right. And so I do think that, the U.S. has not only old housing stock, but it's also expensive, right? Buying a single family home is not as much in reach for most of the population as it was 40 years ago. And so if you want to incentivize home ownership, you need a different property type, right? You need a different product that's widely available in the market. And so I think you're going to see both shifts in terms of what is in each of those asset classes, but also you're going to see shifts toward, maybe away from home ownership, which is one of the things that we've actually seen over the last little bit.
Hey, there's someone at my door. I'm gonna go down, pick up a package. You can answer the question while I'm doing that.
Sure.
Tell me about your portcos and which one have been the most successful so far.
Yeah. So the portfolio companies, so we've got 14 in the portfolio. I think in general, the way I think about it is we're looking to invest in companies that are creating through their software solutions hard, if not impossible, to replicate data sets. So I think there's a number of good examples of businesses doing that. One of the standout in our portfolio is a company called Dextal. Dextal provides pre-panelized exterior panels for high-rise construction. The general value prop, right, is they save customers on the expense of that installation, but they also reduce the error rate because they're providing a software solution in the design phase and even the earliest parts of scoping, so that the installation works out the way that that it's drawn on paper. So they're doing very well. We have another company in the portfolio, Helix Intel. So similar kind of story. You have large building systems. You want to figure out whether you should maintain and how you should maintain these large building systems, say boilers, commercial HVAC, what have you. But you also want to understand when you should replace that product, because there's some real risk that your insurer is taking in insuring that building. And so they've built a very successful CMMS, right, that's creating that data set. And then from that data set, you have the ability to grow the business in a bunch of different directions. And so I think you're sort of seeing that across our portfolio, right? It's ResiDesk is another good example. They're human in the loop SMS interface for residents, right? So tenants of multifamily buildings. And so they can glean all sorts of interesting insights once they have collected that data, right? But you really need to create this, sort of delightful product experience that people will actually use, which is a huge hurdle in this industry. And then once they're using that product, right, it opens up a bunch of other interesting avenues for monetization. So I think that's a pretty central theme across our portfolio.
So you were bullish on the business idea, potentially saw product market fit. What about the founders? What are traits that you're looking in for like top founders?
Yeah, it's, I again think that prop tech is a pretty challenging industry in this regard, because what you really need is somebody who has had enough experience in the real estate industry to viscerally understand the pain and how their intended users are actually going to behave. It's somewhat counterintuitive. It's a pretty closed industry, even though it's enormous, right? Your average person doesn't get a ton of exposure to the real estate capital markets, as an example. So I think that you need to have that sort of direct industry experience, but then you also have to have all of those characteristics that generalist VCs talk about in a founder to build a successful venture business. And so that's really our first gating factor. And to find individuals that check both of those boxes, right, has a real strong signal to spend a whole lot more time digging in and really understanding that business. Although there are examples of folks that have been successful from real estate without additional venture experience, right, but they still sort of inherently have that skill set.
What about on the other side, LPs? Who are you aiming for, and any tips to fundraise from LPs?
Yeah, so I think this market's changing a lot. So in our first fund, the vast majority of those LPs are real estate owners and operators, because we wanted a network to bring deals to, if, say, it address an asset class that we didn't feel like we had as much expertise as our LPs, and they were more likely to have a built-in customer base, right, for our portfolio companies. I think 4 years of worse than anticipated returns in real estate and a real liquidity crunch probably means that going forward, as a percentage of the total portfolio, we'd have relatively fewer LPs. And then we also have pretty good representation from prop tech founders, right? And I think that's the other resource that we like to have aligned for our team, some of which are also venture partners. But that really sort of, I think when you get those couple of sort of resources on the cap table, then you can really think about, filling it out with institutional capital, right? That's maybe not as focused on, on sort of those operational things that they could do to help.
How do you think, or how did you transition from founder to VC, and what was the mindset?
Yeah, well, so I think it's been clear to me way before I made that transition that was something that I wanted to do. And so if you kind of read through my professional history prior to that, it was all sort of hoped or intended, right, to lead to being a VC. So I think, being an operator inside of a software company was something that was very important for me to do, to have credibility. I think doing a lot of investment on behalf of either SPVs or out of a family office gave me a real high number of deals, right, that I could draw on those experiences from. And then I think that being a founder as well, bootstrapping two general partnerships, right, you sort of have a lot of time in that seat. And so I think that all those things sort of are sort of key functions, right? And then the things you do within those roles, right? Raising money over and over again. And then, providing guidance and counseling to investments, right? To those founding teams. I tried to get as much of that in a sort of well-rounded way as I could. And then also, being an angel for some time now, that's sort of given me a little bit more of that experience to see, what does it look like when things go really well? What does it look like when things go really poorly, or more often than not, what happens when a big obstacle comes up, right? How does that founder deal with that problem and sort of get past it?
And how did you used to deal with problems, or how do you deal with problems nowadays? What's the mindset? What's the inner chatter, and how do you solve it?
Yeah, it's a good question. So, I mean, a couple of things I've learned about myself is like when you have something that's making you anxious, the best thing you can do is just go solve the problem, right? That sort of reduces that chatter or that feeling. There's also a great Mark Twain quote. I'm going to butcher it a little bit, but basically, if it's your job to eat a frog, best eat it for breakfast. And if it's your job to eat two frogs, best eat the big one first. And so I think that's really kind of a good summary, right? Is you're going to have a portfolio of problems. Go solve the one that's going to move the needle the furthest first, and then move on to the next one. But if you Ben Horowitz talks a lot about this, right? You want founders that run to problems, and in part that's a great way to solve problems. But from the founder's perspective, right, it's a good way to sort of not get overwhelmed and to stay in a very proactive headspace about solving all the issues that are certainly going to arise.
From your time in family offices, what kind of problems did you solve for them? You mentioned alternative investments, right? Which is like in a lot of spaces. So tell us about some of the insights there. And nowadays, do you also raise from family offices?
Yeah. So I think, there's no two family offices that are alike. So I'll speak in broad generalizations, but I think that, at the end of the day, family offices kind of have like three problems, right? So they have legacy, which, if you're talking about it purely financially, is the growth of the corpus, right? You have liquidity, which is always challenging and I think underappreciated when people are managing private portfolios across a bunch of different asset classes, with the exception of sophisticated family offices that are quite good at this. And then you have income, right? You have a team that you've got to pay for. You've got living expenses, right, or charitable commitments that you want to meet. So I think those are kind of the three buckets. And when you're raising money from a family office, you really need to understand like what problem are you solving for them, right? Is it easier and safer for them to go buy a bond portfolio than your alternative credit fund, right? And if it's not, if you're paying a higher return, right? Well, is it risk adjusted the same as those alternatives? And so I think that's the thing that a lot of people miss is they look at family offices as just, hey, these guys have ultimate flexibility and total control of capital, right? But those are ocean liners, right? Not dinghies. And so they take a long time to turn around, to generate liquidity, to exit positions if they have lockups. And so you really need to, it's a timing issue, right? But you also just really need to understand what is the financial problem that entity is trying to solve for themselves. And are you a solution, right? And if you're not, then build a relationship and stop being transactional. And if you are, try and understand a little bit more deeply what are the characteristics of, that solution to that problem that they've defined.
Hey, last 5 minutes, let's do a quick rapid fire. So expeditionary traveler, what was your last expedition and lessons you've got from it?
Last one was a 9-day fly fishing trip in Alaska. So took a few planes, got dropped off out of a float plane with a buddy and a guide, and we went cruising down a river called American Creek in the Katmai Wilderness. The main surprise was I heard a lot of bears, but I didn't see any. And I think that, there's still a ton of new cool trips that I haven't done. And so I want to keep exploring.
And what were the obstacles you faced there?
Well, I mean, it rains a lot and it's very cold. So, I think there were definitely a couple moments where I was pretty cold, and one day it rained on us all day, and then we get to camp and, you're just sort of standing out in it, right? And it's hard not to think about, a dry, more comfortable existence, or, why didn't I book the lodge or whatever? But, the sun always comes out, and you always realize that, it's worth suffering through the conditions sometimes.
There you go. You're a dad as well. Why did you decide to become a dad? And any lessons from a 3 days old dad like myself?
Well, congratulations. I don't have lessons. I think we're all doing the best we can, and you only get to do it once or, twice or 3 times, however many kids you have. So there's really, there's not a lot of experts in the way that, you can be an expert as a doctor, having treated the same condition a million times. I think one of the things that excites me about it and why I chose to do it is that I think kids are more fun than grown-ups, candidly. And I also think that it's kind of the biggest adventure you can take, right? It's sort of the ultimate roll of the dice. You don't know what that kid's going to be like. You don't know if you're going to have the same interests. There's no days off, right? You get thrown curveballs, but it's sort of like it's kind of like being outside, right? You have these glorious highs and these, challenging lows. And I think there's, sort of a lot of growth and learning and joy in that. And so, anchor in that, I think, is the advice that I would give dads. And don't be like, oh my God, they're freaking out for the 15th time about wanting to put their shoes on the wrong feet, right? Like, just sort of, if you can get a little bit of space from what's going on in the room, it's a little bit easier to enjoy.
Right. You're pretty obsessed with music as well. Tell me about that passion of yours. How you listen to music daily, how it intertwines with your full life.
Yeah, I mean, I've always loved music. I grew up playing instruments. I'm not a artist at this point in my life, nor was I ever really. But yeah, I mean, for me, it's always been meaningful. It's always a shared emotional experience to see live music in particular. And I find it to be pretty cathartic. And so several years ago, I ran into an organization called Sonic Guild in Austin that has a membership model where they perform music for the members of the organization and then give away grants, provide tour support dollars. We have a donor who provides a songwriting retreat. We have a producer's grant so that not only do the artists get cash to do things, but they can also pay a producer to produce a new album. And so, I think for me, artists are a lot like early stage founders, right? And there's a power law in that industry too. And so if you want more art, I think it's worthy of being supported, just like the opera or the symphony. Yeah, I've listened to a ton of music, although now my recommendations are starting to be intertwined with the interests of a 9-year-old girl. So my
Taylor Swift.
Yeah.
Baby. Your podcast, tell me a bit more about it. What was the thesis behind it?
Yeah, so the thesis is that, there are lots of people that are, sort of successful by any conventional definition, and it's pretty easy to look at their life and see a linear path. But I don't know a single person whose path has been linear that I would put in that bucket. There's always, sort of interesting inflection points or, in hindsight, critical decisions that they made that really altered the course of their trajectory. And oftentimes they, go deep in one domain and then apply those lessons in another one where they ultimately find, fulfillment or satisfaction. And so I wanted to interview mostly my friends for this first season. It's called Navigating Complexity, really just about that and get their stories out and understand, what decisions they made and with the benefit of hindsight, maybe would have done differently. And so there'll be a season 2 later this year.
How do you quench your curiosity nowadays?
Right now, I've been reading a lot about the history of banks. So I just finished a JP Morgan book. I just finished a Goldman Sachs book. I'm now reading one on GE. And I think that what I have found most interesting is that finance is the thing that's most interesting to me professionally and sort of intellectually. And so it's a very good kind of through line to read about world events. And if you're, reading the history of some of these big banks, right, you're reading the history of stock market crashes, World War I, the Great Depression, all sorts of geopolitical upheaval, McCarthyism, right? It's sort of always, the finance industry is always not too far away from whatever those historical events were. And so I've really been enjoying that.
And it's a very private industry, so not all the knowledge is out there to avoid panics and bank runs, right? So it's always useful to study the history of banks. I would also recommend that book, which is great, which I read, but it also probably quiz ChatGPT about a lot of things and be like a kid, ask a bunch of questions because you can get very deep in that rabbit hole. Matt, thanks for coming in on the podcast. Where can people find out more about you?
So stellifyvc.com is Stellify's website. You can also find me at mmmcdonnell.com and on LinkedIn with McDonnell as well as Instagram.
That was Matt and Charles for